Meet DEMZ, the first fund that only invests in companies who donate over 75% of their political contributions to Democratic candidates and organizations. Vote with your dollar, invest with your values. Investing involves risk. Principal loss is possible. Carefully consider the fund's investment objectives, risk factors, charges, and expenses before investing. This and additional information can be found in the fund's summary or full prospectus, which may be obtained by visiting demz.fund. Please read the prospectus carefully before investing.
Hi, everyone. My name is Brian Potts. I'm here today to be the MC of this DEMZ informational session. I am a co-founder of Goods Unite Us and Blue ETFs, which are the data providers for DEMZ. With me today, I have Abigail Wuest. Welcome, Abigail. How are you?
I'm fine, thank you.
Yeah, Abigail is the CEO of Goods Unite Us, the data provider for DEMZ. She is an attorney, former politician, and an overall amazing person. And with us today, I also have Jason Britton. Hi, Jason. How are you?
Hi, Brian. How are you?
I'm doing great. So Jason has a long list of amazing accomplishments. He's a professor of impact investing at the School of Business at the College of Charleston. He is the founder of Reflection Asset Management. Prior to founding Reflection Asset Management, Jason served as the senior managing director and head portfolio manager of the U.S. Trust Bank of America Social Innovation Suite of projects. He also worked at Barclays and Lehman Brothers. And during his multi-decade career, yes, he's that old, he has advised on over $3 billion in ESG assets. Jason has also served as a lecturer at a few schools you may have heard of, including Harvard, Yale, MIT, and the Wharton School of Business at Pennsylvania, and UCLA. He's a graduate of Georgetown and earned his MBA from the Yale School of Management. And for our purposes, Jason is the fund manager. He is the one that can get into the details on the fund, how it's constructed, etc. So I'm the MC. We are here today to provide some background information about DEMZ, hopefully short, and I have a few questions prepared for Jason and Abigail to answer. However, if anyone has questions as we're going along, please just comment and add the questions and we can answer them. So I'm going to start out with Jason, and basic question, since we're here today to talk about DEMZ, what is DEMZ?
Great question. So DEMZ, D-E-M-Z, just like your shirt, thanks for the support, is an exchange-traded fund that is listed on the NASDAQ, that is part of the Advisors Inner Circle Trust. A lot of words in that sentence. What that really means is that Reflection Asset Management, in partnership with Goods Unite Us and Blue ETFs, has launched an investment product, just like a traditional ETF or a mutual fund you might think of, like an SPY or an IVV. What we did was we designed a product in partnership with Blue ETFs and Goods Unite Us data to select those companies in the S&P 500 that had 75% or more of their giving, their political contributions, both at the corporate level and at the executive level, 75% or more would qualify for inclusion in our product, and then factor weighted, or actually built a best in class based on what we thought was going to happen in the market product, focusing on those companies that were blue or democratically leaning with 75% or more. So that in and of itself, Brian, is exactly what DEMZ is. It is an exchange traded product. It is a basket. So it is a representative share class of all the different companies. There are approximately 60 that meet those requirements, being attractive financially and also part of that 75% or more contribution, and are offered for in $23.82, I believe was the last trade, increments for those investors who want to see their values aligned with their politics, aligned with social and high quality financial performance.
And just to clarify, I think it's $28.32, not $23.82. And
28.42 was the last trade, so I misspoke. Thank you.
Yeah,
2842.
So Abigail, why is DEMZ important to you? And I'm going to ask the same question to Jason.
Well, Goods Unite Us really has a couple primary missions, and our missions are to increase transparency and accountability around corporate money in politics. And part of that mission is to allow consumers and voters to align their spending with their vote. Well, we decided to get involved in the financial and investment realm, primarily because we want that information that we provide, that accountability, that transparency, to have the most impact possible. And we realize that investments constitute a large amount of an individual voter or consumer's money and financial value and worth. And because we live in a time now where our money has, our money has a protected speech. Our money has a lot of power over politics. And so what we wanted to do is we wanted to allow our transparency and our accountability to go into the investment world and allow investors to align their investments with their values. So basically letting your investments work for you, not only financially, but also ideologically and politically.
So Jason, I'll ask you the same question. Obviously you and Abigail come from different backgrounds. Abigail was a politician and a lawyer, not a finance person like me. I'm a lawyer. So from a finance perspective and from Jason Britton's perspective, why is this project important to you, and why is DEMZ important to you?
Well, so that's an excellent question, Brian, because it bakes in two things. And everything that Abigail just said, I do believe deeply in my core as a person, right? That anytime you have an interaction, whether it's buying a stick of gum or a new car and anything in between, you are supporting a community, you're supporting government with tax dollars, sales tax, etc. And Goods Unite Us stands behind the concept of not necessarily leaning one way or the other or supporting one party or the other. It's the concept of transparency and understanding, right? Do you know that when you own the S&P 500, that 50+% of the companies in that are giving a substantial amount to the Republican Party? And if you're okay with that, terrific. But you've asked the question. The second part of that from a finance perspective, and this is really the reason that I actually got out of retirement. So just to give everybody a little background, as Brian had said, I previously ran all of the social innovation suite at Bank of America, US Trust, Merrill Lynch. And that organization had essentially hundreds and hundreds of offices. There's 14,000 advisors that work at Merrill Lynch. And it was very exciting to do what we were doing. We were helping people, individuals, endowments, foundations, universities, systems, and charities put their investments where their values were. And over that almost 10 years that I ran those products there, I got to know a lot of different people, and I got to understand a lot of different themes and a lot of different ways folks were investing in the US equity markets. And from a pure product perspective, why this spoke to me and why I agreed to add, in addition to my teaching responsibilities, being fortunate enough to be the portfolio manager for this product, was for the 6 months before we launched, we dissected this data, the Goods Unite Us data around companies over the average spending over 3 election cycles. And I desperately tried to find something wrong with the investment thesis that said companies that gave preponderantly to the Democratic Party and or Democratic causes were going to underperform the market, right? That they were going to be big spenders. They were going to just not be always focused on the shareholder. And I couldn't find anything further from the truth. If you look at the companies that are in this product and you look at them from an ESG perspective, you look at them from a growth versus value perspective, you look at them as just individual equity positions that have been put together, never mind the name of the fund, right? But just how does this stack up, regardless of what it's called or how you got here, with other products? And it's exceptional, right? From a risk-adjusted basis, it looks and feels just like the index, meaning the S&P. It represents, broadly speaking, a beta, which is a fancy finance term, which just means how much is it like the S&P? And the answer is 0.99, right? But we only own 60 companies, 60 high quality companies in multiple different sectors. The only sector that we don't own any company in is energy. Not surprising, I think, because most energy companies tend to lean fairly right. And that's done extremely well for us. One, because energy has been challenged recently. Over the last sort of 10 years. It's come back in the last sort of 9 to 10 months. But broadly speaking, as an investment product, the way that this is put together, if you're looking for exposure in the S&P and you want something that is going to be tilted towards protection around inflation, because just equities, broadly speaking, are that, companies that are thoughtful and are both relatively well prepared for continued economic expansion, and also somewhat defensively prepared around inflation and other things should the pandemic recovery slow or the Delta variant have additional, what I would call, braking tendencies, or even as this, Chairman Powell said, that the Fed begins to taper at the end of the year, the asset purchasing. I would not expect those to have a substantially negative effect on the portfolio, or certainly any more so than it would against a regular S&P product. It's that transparency, it's that support, as Abigail said, know what you're buying and why, be a part of it. Don't just support the products, support the company in the way it engages the community, support the senior management in the way it engages the community. And frankly, if you look at the numbers, be well rewarded for doing so.
And both of you mentioned sort of both, I guess, the social values concept associated with this product. And, I do know there are a lot of companies in the S&P 500 that give, a large percentage to Republicans and a large percentage to Democrats. So I guess, Abigail, back to you. How did you get involved in the creation of DEMZ?
Well, as I said, with Goods Unite Us, we really wanted to expand into the financial and investment realm because we realize how much impact people's money has on politics. And a big chunk of that is in their investments. And your investments are one thing I think is it's important for everybody to keep in mind is your money is out there having power and affecting things, whether you know it or not. So it's time that we start taking a little bit of responsibility for how our own money, our own investments are affecting our elections and therefore affecting laws in our country and the things that we care about. So our involvement with getting DEMZ off the ground was really the idea that we wanted to help to enter the financial and investment realm in order to make our data applicable to a whole nother set or subset of people's value and people's, which really translates to people's power over our elections. And as I'll give you an example, as a consumer, a voter, and an investor, if I am going out and making purchasing decisions based on my politics using the Goods Unite Us app, and then I go around and buy an investment product that includes all 500 companies or 500 plus companies from the S&P 500. There's an inconsistency there because as a progressive, say I'm a progressive, a lot of the money that is going into my investments is going to buy parts of companies that are going out into the world and using their power to support Republican candidates. And there's an inconsistency there. And I don't want my investments, if I'm a progressive, doing that. So that's one of the kind of the motivations behind Goods Unite Us as a transparency and accountability information company for getting into the investment realm.
And I think I'd like to jump into sort of where the rubber meets the road, Jason, and I'll bring up your handy PowerPoint. But I think, this is an investment product and people are often curious sort of with investments, as they should be, about performance. And so I'd like you to talk a little bit about that if you can.
Sure. Do you mind advancing a slide?
I think you have control of the slides.
Then I don't mind advancing a slide one bit.
There we go.
So there are a couple of different pieces here that I think are really worth diving into and providing clarity on, right? There will invariably be some resistance to any new investment product, simply for the fact that it's new, right? The very first day, the very first hedge fund launched, despite how great an idea it is, despite the fact that it's $1 trillion industry now, somebody somewhere said, oh, but should we do it? It's new. And that was true for every single thing. That was true when Jack Bogle decided to launch the very first mutual fund or the very first ETF. And that's still true today. So you're always going to have a little bit of that. It's odd in finance. You have sort of the opposite of the first mover advantage or the early adopter mentality. Folks tend to be very interested in what you have to say, but I'll wait and see how it goes, or I'll wait and see if it works out. What's important to understand is that we have a series of professional organizations that have come together, right, to offer this product to the general public. And that in and of itself, having an ETF, an exchange traded fund, registered with the SEC, listed on the NASDAQ stock exchange, governed by SEI, which is one of the largest fund administrators in the world, right, north of about 60% of all of the ETFs and mutual funds under administration come through SEI. They were one of the very first organizations in the 70s to launch the concept of a mutual fund or an exchange traded fund. We clear and custody, which is the people who actually hold the money, through Brown Brothers Harriman, which is a custody bank that's over 100 years old. And we have what's called authorized participants, which are big, well-regarded, well-known, solid balance sheet Wall Street firms who become our trading partners and actually facilitate the movement of money into and out of the DEMZ product. And those organizations are Merrill Lynch, Credit Suisse, UBS, Goldman Sachs. So folks you've heard of. So when you're thinking about, okay, this is a new product, what does that mean to me? Or the performance, it's only been running since election, right? November the 2nd, we launched on election day of 2020. I'm gonna wait and see how it does. One of those partners was S&P Dow Jones. And we hired S&P Dow Jones, which is one of the largest index providers and index calculation agents in the world, to take our methodology, right? The intersection of high quality portfolio construction and the data provided by Goods Unite Us, and said, if we gave you these rules and you independently went away and calculated performance, how would we have done following this explicit, quantifiable, every quarter rebalance, et cetera. And what you see in front of you is the calculation that they, completely devoid from influence from us, comprised. What you see is they took the information and the data all the way back to 2016, which is when we had the first series of election data that Goods has been publishing, and ran it all the way through October 2nd in this instance, which was the date that we turned on, if you will, the live index. And you can see that in almost every observable, and in fact, in every observable period, 16, 17, 18, 19, and the better half of 2020, the product performed better than the S&P 500. This is an independently verified and audited backtest by S&P Dow Jones, the same folks who put together the S&P 500. So
and how,
go ahead.
And let me just stop you there. How's it doing since launch?
Well, if you'll move the slide forward.
That's you again.
You can see that the performance is still held up extremely well. So the period between October 2nd, 2020 and 10/31/2020, again, still index performance, did extremely well. And then our launch on November the 2nd of 2020, all the way through the close of the end of the second quarter is the data here. And I actually ran the numbers through from last night. It's important that there's a distinction, right? So there's the index and then there's the product. For all intents and purposes, they're one and the same because the product is designed to mechanically mirror the index. So it is a very fair and reasonable comparison here. And that's why we're showing you the index, because we don't have that quote unquote data for the product. But since launch, right, the launch price of the product was $20.25. That is the value at which a single share of DEMZ traded for the first time on the NASDAQ. And as you correctly noted, and as I'm scrolling along the bottom, the final price yesterday was $28.42. That is a total return from launch day at a price of $20.25 through a close yesterday at $28.42 of 40.35%. So I'm going to say that again. The product since launch, just in the last, call it not quite full year, right? 9 or so months, 8 months and change, is up 40.35%. Now, the market's done extremely well too. And when the market does well, you would expect a derivative product like ours and a product that is comprised of components of the index to do well. The S&P 500 for that same period, November 2nd through the close yesterday, is up 33%. Now that's a very good number. 33% is an extremely strong bull market. But quickly do the math. DEMZ has outperformed the S&P for the same period, so the SPY, by over 7.3%, right, in less than a year. You're up 7% in a market that's already up 33.
And Jason, we have a question from someone online, but what can you say about DEMZ that will convince investors that future performance will be strong like past performance?
So that's a great question. Two things that I would have to say about that. First of all, past performance, right, is what it is, and it is not necessarily a predictor of future performance. But there are things that I can comment on structurally around the product that should give you tremendous comfort around how it's built and how you can expect it to continue to perform given certain market conditions. Now, as a prognosticator, tea leaf reader, forecaster, whatever term you want to use, I've made quite a successful career at it. At one point, running over $3 billion at 2 Fortune 100 institutions, to the point where I was able to retire in my early 40s and take a teaching position and move down to the beach. So I'm pretty good at what I do. This, structurally speaking, from a pure portfolio mechanic, just how did you think about selecting the positions, and in what sectors did you put them in? Why do you own specific names? It is one of the best things that I've ever built in my career. It will do incredibly well if the market continues on a tear. We'll continue to test highs at the S&P. If inflation does prove itself to be what we're calling transitory right now, so not necessarily indicative or real, but just a systematic short hop in prices because of COVID, because of the shortages and the disruption to the supply chain that will sort of unkink itself in coming years. I think we'll do incredibly well because we are favored and own incredibly large cap, high growth names, names that Netflix and companies that you would absolutely recognize. We're also positioned though to the downside, to the extent that there is a hiccup in the labor demand. They don't sort out the chip shortage, and that the consumer becomes a lot more conservative, and there are potentially either global or at least periodic and isolated lockdowns. We own companies like Costco and paper products companies. So the key here is thoughtfully spreading around the investment in the different positions, and the positions are obviously in different industries, and it makes this beautiful mosaic that will allow us. Now, granted, if the world comes to a screeching halt and the dollar falls off the face of the earth and something horrific happens, of course, all investing involves risk, right? And principal loss, as you can see across the bottom of the screen, is possible. This is not a money-making machine. There is no guarantee here. But what I can say is that of the 65 positions that this portfolio is comprised of, short of an unmitigated disaster, it will perform as well or better than the S&P, in my estimation, on at least the near-term go-forward basis.
And, that's great, Jason. Thanks for that background. I guess I want to ask Abigail, what's next for DEMZ?
Yeah, well, really with Goods Unite Us too, what's next for us is increasing the amount and the quality of our data constantly. And with our partnership here with DEMZ, we're really excited that DEMZ is going to start working with Crooked Media. So some of our viewers might know who they are. We're excited to be working with Crooked Media to start getting the word out, because we really need to get people to know about this product and to start thinking about their investments and how their investments are affecting politics. So we're excited about a new arrangement where we will be working with Crooked Media to kind of get the word out about DEMZ. And people can hear more about DEMZ on Pod Save America coming later in September. So we're excited about that.
Yeah, that's really cool. And Jason, we got another question from the audience. What's the percentage fee for DEMZ, and how does that compare to other active thematic ETFs?
Great question, and thank you to whoever my value investor in the crowd is, right? So after fee, after tax is really the most important and only real way to determine how good a fund is doing. This product is offered at what's called a unitary fee, meaning no surprises, no hidden fees, no coming in and going charges, no sales commissions, etc. It is a single one-stop price of 45 basis points, or 0.45, or less than 0.5%. Now, to scale that for you, the average price of a mutual fund is a little north of 1%, and the average price of a thematic, which means not just index replication, but expressing something, growth, value, tech, etc. Exchange traded fund, or ETF, is about 75 basis points. So this is 2/3 less expensive than the average ETF and less than half of the average mutual fund in terms of price and cost to you. All the while, frankly, again, at the risk of seeming, overly confident in beating our own drum, at 700 basis points or 7% of outperformance. From a risk return perspective, you cost you 45 basis points to make 700. That's a pretty good trade.
Well, I know you have a slide that shows some of the holdings, and I think it'd be good to put that up while we're talking here. There you go. So one other question we've gotten is, how does DEMZ score on ESG metrics? And I guess I'll start out by mentioning a Goods Unite Us study that I'm aware of, which Goods Unite Us took the political data they had, and they work with CSR Hub, which is one of the ESG rating companies, and they ran an analysis, and the Goods Unite Us and CSR Hub report found that there was a statistically significant correlation between Democrat companies, in other words, companies that contribute to Democrats, and high ESG scores. And Jason, I believe Morningstar has also rated the DEMZ portfolio. Is that correct?
It has, and it actually scores incredibly well, sort of in the top third of all funds. And again, reminding the audience, Morningstar looks for intentionality around ESG scores and scores those companies and gives you your rating, similar to a credit rating agency. We only use the criteria of 75% or more of total political contributions on average over the last 3 election cycles in order to be eligible. We did not use any other ESG criteria to select. So we didn't say the company has to have X percentage of women on the board or has to be inclusive in one of those other categories or other industries. It just so happens there's an extremely strong correlation between companies that are thoughtful and progressive in terms of where they give their corporate treasure and how they're managing their business, which is incredibly encouraging, right? You would hate to see companies be poorly run and disrespectful of gender and not thoughtful about the environment, and then putting all of their corporate PAC dollars and their political contributions into Democratic companies. This group of companies is actually walking the talk, as well as putting their money where their mouth is.
And this isn't a question from the audience, but it's a question I've gotten quite a bit. Are there any liquidity concerns with buying DEMZ? 'Cause it's a new ETF. The volumes are, as a new ETF, pretty low. But what kind of liquidity issues, if any, are there?
So great question. And it's really important to understand the structural distinction between a mutual fund and an exchange traded fund. So in a mutual fund, you, the investor, are doing business with the mutual fund company directly. And the size of that company, its balance sheet, its fiscal health, its operating policies and procedures are all incredibly relevant. Not to say that they don't matter in an ETF, but in the way an exchange traded fund is set up, Reflection Asset Management, and by extension, everyone involved in the product, is not at all similarly situated as you would in a mutual fund. What I mean by that is that, and I actually have a slide, right? So Reflection Asset Management helps with the benefit of Goods Unite Us data to set the portfolio. Once we set the portfolio, that entire bottom set, Bank of America, Goldman Sachs, Virtu, Credit Suisse, and Merrill Lynch, are all the folks that are doing the transactions, that are the ones that are creating the baskets of securities, that are redeeming the baskets of securities. So the liquidity concerns and the structural soundness of, if I bought in, can I get out? Or if I wanted to be a buyer of size too, that's also the other side of the equation. If it's only trading 2,000 shares a day on average, and I want to buy 10,000 shares, am I going to disrupt the price? Am I going to do something to that? And the answer to all that is no. Right? The way exchange traded funds work, because they're created in baskets of underlying securities, and the securities we've selected are S&P 500 names, it is virtually limitless in terms of the liquidity of the product and the ability for the product to create or redeem shares. So in order for the way you described something to be of concern, you would have to simultaneously see Goldman Sachs, Credit Suisse, Merrill Lynch, and Bank of America fall at the same time for there to be a real challenge on getting in and out of DEMZ. So I ballpark that as pretty unlikely.
And I have an interesting question, and this one's for Abigail. I don't know if you could go back a slide, Jason. Someone noticed on the slide, Facebook is one of the holdings, and I just looked up Facebook on the Goods Unitas app, and it has an 85% Democrat score, meaning 85% of Facebook's contributions over the last 3 federal election cycles, and it would include senior management, go to Democrats. So I guess I ask Abigail, how do you feel about Facebook being included, and why do you think it should be included in a fund like this?
Yeah, I mean, that's a good question. One thing I would just say is that what Goods Unitas does is simply track publicly available political contribution data. And we do not track individual social issues and companies. We don't do an ESG rating ourselves. So, and there's a reason that Goods Unitas, from our inception, really decided to focus on money in politics. And that reason is because we really do feel that politics have such a direct effect on all of the sub-issues that a lot of us care about, a lot of the ESG type issues, gender, the environment, all sorts of really important social issues. Politics, who we elect to make our laws, very, very much affects those issues. And so from our perspective, we wanted to stay with evaluating that verifiable, objective data, because we really do feel that a company's political contributions indirectly, but very significantly affects all of those social issues that we care about. So Goods Unitas gives you a snapshot of those contributions, and DEMZ, as Jason said, looks at that data to kind of create the index. So Facebook is in this fund because of objective, verifiable, publicly available contribution data and history, and that's something that we feel is very significant to those other social issues. And so that's why we don't go in. I know a lot of people have concerns with certain large companies on individual social issues, but at Goods Unitas, we're really looking primarily at how is that company really affecting politics and the election of officials who are going to be making our laws.
Thank you. And Jason, we got another question here, which is similar to the liquidity one we talked about. I'm gonna pull you back up. This is a question from somewhere out in the universe. If I buy into DEMZ, how certain can I be that I'll be able to sell if and when I want to sell?
So, Brian, if you go back to the slide. The bottom rung is Bank of America, Goldman Sachs, Virtu Financial, Credit Suisse, and Merrill Lynch. Those are referred to as authorized participants. What that means is, especially Virtu Financial, is those organizations have a legal contract between themselves, SEI, and Reflection Asset Management to provide liquidity. What that means is you probably have heard, if you've watched any of the Mad Money or any of the Morning Joe or any of the shows around finance, you hear people talk about bid and ask, right? Bid and ask just means the price at which someone is willing to buy and the price at which someone is willing to sell. And those things are quoted out in the world. You have market makers or organizations that are designated for each security, where the SEC requires that market maker to step in and provide an orderly transition. So for the person who asked that question, how certain am I? I am certain to the absolute extent that it is required by law for those companies who have agreed and contractually signed up to be authorized participants and market makers to honor your trade. If you buy, you will buy in. And again, this would just be a little tip that I would give to our viewers today. When you're making a purchase of an exchange traded fund, buy with a limit order. If you don't know what that is, we can sort of reach out to whoever invited you to this or however you found out here. We can give you a little tutorial on what a limit order is, but buy with a limit order and sell with a limit order. If you do those two things, if the New York Stock Exchange is open and functioning, you'll be able to get in or out of DEMZ without any trouble.
Okay, great. And I see doesn't look like we have any more questions, and I just want to give you all one chance to sort of concluding thoughts, and I'll start with Abigail.
Yeah, thanks, Brian. I guess I would just say, as a takeaway, an important takeaway is that our money has power in our society right now, and our investments matter. And that is just something that we all, as voters and as consumers and investors, need to start thinking about so that we can protect our vote and we can also have our investments really working for us, both ideologically and financially.
All right, thanks. And Jason?
I mean, I would just expand on that theme. This really is, again, as I put my economist portfolio manager hat on, this is a simple yes or no question. Have you ever volunteered for a progressive or Democratic caucus or candidate? Have you ever voted for a Democrat in a local or national or federal or otherwise election? And if the answer to that is yes, this is something that you should take a look at, because if politics matters enough to you that you exercise your voice and you vote, you should do the same thing with your dollars. It's just that simple.
All right. Well, thank you, Abigail and Jason, and thanks to all the viewers out there. This recording will be available on our YouTube channel, and we will likely be doing more of these in the future. But thanks again. And with that, we will bid everyone a wonderful Thursday afternoon. Thanks again.
Thank you, Brian.